And welcome back, it's Jason Walter here. I'm making today's video because I noticed that Realtor.com announced their latest housing market update, and it actually was just announced today at the time of this video. So hope you guys appreciate these timely updates because every week something seems to happen. Our market is very volatile this year, to say the least. So in today's video, I'm going to give you an update regarding home prices, new listings, housing inventory, and of course, price reductions across the United States. And here's the actual report from Realtor.com, which just like my previous videos, I actually didn't even read. I actually want to share my own analysis based on Realtor.com's data here. So if you guys want to check this out though, if you want to look at their analysis, which again, I haven't even looked at, I'll leave a link below for you guys. So here's what you do. Go to realtor.com/research/data. It takes you to this website right here. Scroll down right here and click on this link right here, which more or less takes you to this data right here, which of course I have color-coded and analyzed to give you guys some insights regarding, what's really happening with the housing market. I know a lot of people are asking me what's going to be happening because mortgage rates have been increasing so much. Rates have been over 6% ever since September 1st of this year. So a very volatile housing market, and I actually really enjoy making these videos for you guys. So if you guys enjoy these videos, of course, please hit the like button. Share this video with anyone you feel who may benefit from it. Anyways, I digress. I want to share the latest trends with you guys right here. So the week right here is for the week ending October 1st. This is the most recent data we have from Realtor.com. So let's first talk about home prices. This is the median asking price across the United States, up 13.3% compared to the same week 1 year ago. By the way, these are all percentages, except for days in the market, of course. These are all percentages based on year-over-year changes. So changes we're seeing right now compared to the same time period 1 year ago. So the median asking price is up by 13.3%. Obviously, this is historically high. We tend to see price gains in the range of 3 to 6%, and of course, not 13%. One thing you guys should be aware of though, these are asking prices, not sold prices. And that's why we're seeing a huge increase in the number of price reductions because we're seeing a lot of overzealous home sellers. So right now, 13.3% is the year-over-year gains. This is still historically high, but not as high as the gains we saw in the middle of, or the beginning of June, all the way until the beginning of July, where we saw gains of around 16 to almost 19%. So one thing regarding this is that it would be entirely normal to see price gains to not be as high as the summer months or the spring months. So it would be entirely normal to see housing prices plateau or even decrease through the winter months, and that would be entirely normal. That's our seasonality for housing market. But still at 13.3%, still historically high right now. So that's that. Let's have a look at active listing count, which of course is the total number of houses listed for sale or housing supply. So the growth we've been seeing over the past 14 weeks has been hovering around 25 to 30% year-over-year gains. So we're seeing this stagnation of inventory growth over the past 14 weeks. One thing I do want to mention regarding this is that even though we're seeing some plateauing effect regarding housing inventory ever since the beginning of July, according to Realtor.com, the gains right now at 30% is higher than any other month going back. I think this might be year-to-date high. Yeah, this is a year-to-date high. So on a year-over-year basis, this is the biggest increase of housing inventory so far this year, but not by much, right? So last week it was 28.5%, now it's 30%. Also, this increase by 30% compared to 1 year ago is also in line with what AltosResearch.com is reporting as well, because right now they're reporting we have 561,000 houses for sale, and 1 year ago, we had 428,000. That's approximately, I believe, a 29 to 30% increase of housing inventory. When looking at this chart here as well, this is something you also should be aware of as well, because inventory growth has been increasing greatly ever since April this year. And you can see that when looking at Realtor.com's data as well. Ever since April, we saw a big increase of housing inventory because the declines on a year-over-year basis started to increase. In other words, moving to have more houses listed for sale compared to 1 year ago. This is vastly different compared to the first 2 months this year, where we saw decreases in the range of 23% to 30%. In other words, we had approximately 23 to 30% less houses for sale compared to the same time period 1 year ago. But that drastically changed once we hit the spring months of this year. So we're seeing a stagnation of inventory growth, but more recently though, we're not seeing this huge increase in the number of houses for sale here. Because according to AltosResearch.com, ever since really August, we started to see a stagnation of inventory. So in other words, inventory has been more or less plateauing ever since the 1st of August of this year. In my personal opinion, the reason why we're seeing this slowdown of inventory growth is because we're not seeing enough new listings hitting the market. And the data actually supports that, because look at this. Because for 13 consecutive weeks, we've seen fewer new listings hitting the market compared to 1 year ago. You can see right here, fewer new listings compared to 1 year ago for 13 consecutive weeks. And also, due to our seasonality of our housing market, it's entirely normal to see fewer new listings hitting the market in the second half of the year, especially through the winter months. But this year, it's more pronounced because for 14 consecutive weeks, we've seen fewer new listings compared to the same time period 1 year ago. And this includes a 17.2% decline from 1 year ago last week. Also, as a note right here, we're not seeing as many homeowners deciding to sell their houses right now because they don't want to give up their historically low interest rates right now. Also, sellers are becoming more pessimistic due to the slowing down of our housing market. Also, to corroborate this data regarding new listings from 1 year ago, look at this. According to Redfin, compared to 1 year ago, the number of new listings are down by 13.6% from the same time period 1 year ago. Also, we've been seeing fewer new listings ever since the 4 weeks ending July 10th of this year. So in other words, what I'm getting at here is that we're not seeing enough new listings hitting the market to cause the gains of inventory growth to skyrocket like we once did earlier this year. Oh, by the way, I should mention, I'm going to be sharing a summary in today's video at the end of this video because this is a lot of data to cover in today's video. So I'm going to be sharing a summary with you guys. So with that said, let's talk about days on the market. Because on average, it's taking home sellers longer to sell their houses for 10 consecutive weeks compared to the same time period 1 year ago. So right now, it's taking approximately 6 days longer to sell a house compared to 1 year ago. And there's two things I want to mention regarding this stat right here, because days on the market is based on houses that actually have closed escrow. In other words, it's a lagging indicator what our housing market was like approximately 1 to 2 months ago when the offer was accepted by the home seller. That's number one. This is a lagging indicator. This is not indicative of our housing market right now. That's number one. Number two here, for 3 consecutive weeks, we've been seeing a stagnation regarding days on the market as well. So it's taking about 6 days longer to sell a house for 3 consecutive weeks, which is drastically different compared to August, for example, because days on the market really shot up that month because we went from 1 day slower to 5 days slower by the end of August. So the growth of days on the market has been really slowing down for the past 3 weeks now. Okay, that's days on the market. Let's talk about price reductions, or the number of price reductions compared to the same time period 1 year ago. So for this week, we had a 68.3% increase in the number of price reductions compared to the same time period 1 year ago. This is actually a significant decline compared to last week when the count was up by 79.3%. However, though, this is still up 68% from 1 year ago, so still historically high, of course. Even though it's still historically high, it's not as high as what we saw in mid-June and mid-July, because during this time frame right here, we saw gains over 90% on a year-over-year basis. Meanwhile, the share of reduced price listings is sitting at 42% according to AltosResearch.com. 3 months ago, actually 4 months ago, the share was 21%. So in other words, the share of reduced price listings has more or less doubled over the past 4 months. Here's something very important you guys should be aware of as well, because even though the growth rate of the share of reduced price listings has been shooting up greatly this year, it has been more or less flattening over the past several weeks now. And as I note right here, we're not seeing rapid growth of price drops like we once saw in May through July of this year. And here's what I mean by that, because the share of price drops right now is approximately 42%. As you can see right here, ever since April, the share of price reductions absolutely skyrocketed until we hit August. So in August, we saw an increase still of the number of reduced price listings, but we're not seeing this rapid increase like we once did in the first part of this year. So in other words, we're still seeing an increase in the share of price drops, but has been easing off a bit ever since really the middle of August of this year. All right, so changing gears, let me give you a summary regarding the data I'm sharing in today's video, because of course that was a lot. So number one, inventory is still more compared to 1 year ago due to a drop in home buying demand, of course due to an increase of mortgage rates. However, though, we're not seeing a growth of supply like we once did earlier this year. This is likely due to fewer new listings hitting the market for 13 consecutive weeks. And number 2, if inventory growth continues to stagnate, this will likely soften the blow of this housing market slowdown. However, though, mortgage rates have been at or above 6% ever since September 1st of this year. And because we're seeing this rapid rising mortgage rates, this should slow down our housing market further in the weeks and months ahead. And the result of that is we should see an increase of housing supply unless we see a huge decline in new listings, which could stall inventory growth in the weeks ahead. And number 3, the number of reduced price listings is much higher compared to the previous year, up by 68%. And the share of price drops has about doubled over the past 4 months. Also, we're far higher compared to the previous years as well for price drops. And number 4, houses are taking longer to sell compared to the same time period 1 year ago for 10 consecutive weeks now. Again, this is a lagging indicator because this is based on houses that actually have sold or closed escrow. I expect this to increase in the months ahead due to our seasonality of our housing market, but also due to the spike in mortgage rates that we've been seeing over the past several weeks now. And lastly, something I didn't mention in my previous video regarding Realtor.com's update here. Last week, Realtor.com introduced a new methodology for their data. So take a look at this. I actually go onto their website right here, go onto the bottom of their update here. It says, this is for the data I just went over today. It says here, a new and improved methodology for capturing housing market data was introduced 2 weeks ago here. It says most areas across the country will see minor changes, with a smaller handful of areas seeing larger updates. As a result of these changes, the data released since September 29th of 2022 will not be directly comparable with previous data releases, and that's for files downloaded before September 29th, 2022. And with that said, please comment below with your biggest takeaways from today's video. Also, if you got any value in this video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day, and look forward to seeing you on the next video.